Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.
Peter Marrone is back, having successfully built and sold Yamana Gold. He's looking to do it again with his new venture, Allied Gold. This is Paul Harris for Kitco Mining at the Gold Forum Americas in Colorado Springs. Peter, welcome back to Kitco.
Happy to be back.
Well, welcome back to Kitco and welcome back to the gold sector. No retirement, no film production company, no playing golf. You're just right back at it, leading another gold venture.
Well, I've said to you before, I've never golfed in my life, and I think it would be dangerous picking up a golf club. And frankly, this is a lot of fun, building new companies, particularly in this industry. I've grown to love this industry. And so it's a lot of fun to build new companies, a lot of hard work, but I'm looking forward to doing that.
Now, Allied Gold is an African gold producer with a considerable development pipeline. You're producing about 350,000 ounces a year, but most people have never heard of the company before. It seems to be one of those well-kept secrets. Why Allied Gold and why a venture in Africa?
Not dissimilar to 2003 with Yamana. They were assets that had been known but forgotten about, that had development plans that were far better than people anticipated. And the same is true here. The difference in this case is that the production platform is substantially greater. One of the mines is the Sadiola mine. It is a known mine. It was known by IAMGOLD and Anglo Gold. It has been run historically as an oxide mine, and here we are now with an extension of mine life to the oxides, but the future of this mine is the fresh rock, and that fresh rock is at higher grade. It will require a new plant, but the processing through that new plant means that the production platform is certainly in excess of 300,000 ounces per year, and likely closer to 400,000 ounces per year. I like to call it a generational mine because it will run for at least a couple of decades based on proven and probable reserves. That's the platform here.
In the documentation that's been released, you're talking about doubling production, or the aim of doubling production to around 700,000 ounces a year, and then perhaps a line of sight onwards towards 1 million ounces per year. It sounds like you also, as part of that, perhaps have an M&A mandate, much like you did when you grew Yamana. How do you see the company growing?
If I may, let me talk first about the growth profile of the company. You mentioned 350,000 ounces. We're forecasting at least 360,000 ounces this year from the 3 mines. In addition to Sadiola, we have 2 mines treated as a complex because they're so close together in Cote d'Ivoire, the Bonikro and the Agbao mine. That number increases to 700,000 ounces. I deliberately put a plus to that because based on proven and probable reserves alone, we get to over 700,000 ounces by 2029 with a step up in 2026. But that number is likely going to be a lot higher than that because what we saw as part of our due diligence, and we've been conducting due diligence certainly since in the last 5 months, including site diligence, is that there's gold everywhere. So we expect that the proven and probable will increase. That means then that plus gets us closer to 800,000 ounces of production. That's not a big leap to go from 800,000 ounces all the way through to 1 million. And frankly, I'd like to take this company to one that is more than 1 million ounces per year. We did it before with Yamana, getting from 84,000 ounces in 2003 to 1 million ounces by the time we sold it in 2023. I think we can do better than 1 million ounces. Do we have a mandate on M&A? That will depend on our shareholders. I'd like to make the case to them that we've been successful as a management in Yamana in demonstrating that we can deliver returns from acquisitions, that we serially create value in our acquisitions. And if we have that mandate, then we will look to how we can look at M&A to expand on the organic growth. May I say one more thing? Part of what we'd like to do here is to lean very heavily on emerging markets. I know that there's this wisdom out there that companies should be going into developed markets, but I'm finding that where the juice is, where a lot of the returns are emerging markets and frontier, because it seems that the permitting process is fast-tracked, same requirements as one would find in the developed market. But heck, if I wanted to develop a project in Canada today, it would take me somewhere in the range of 8 years just to get it permitted. And yet in some developing parts of the world, as little as 2. And that goes to returns. And we're fully permitted on all of our projects.
You're using the personal pronoun we a lot, and so I think it's important to highlight this isn't just you starting a new venture, it's a lot of the Yamana Gold C-suite that's come with you. So people you know, people you trust, people you've worked with a long time and that you know can deliver. So that management team is coming into Allied Gold to drive that company forward.
Yes, the we is not the royal we here. The we is a management. While that management includes the legacy Yamana management, at least at the C-suite level, it also includes a management that was already in progress, being developed for ultimately taking the company public, the private company going public in Allied Gold. It includes the legacy management, including the founders of the company, Greg Winch and Justin Dibb. In the case of Greg, he stays on in the management. Justin's on our board of directors, but also pivotal role in as a consultant, because we're in parts of the world that we have not operated before. He has been there for the better part of a decade, maybe as long as a dozen years. And it would be the height of hubris and conceit for me to be able to say that we could pick up on, we the legacy management of Yamana, could pick up on all that corporate knowledge of being in these countries within a few months or a few quarters. So we have all of that corporate knowledge retained in the company. That's the we.
And that must be a critical aspect at this juncture in time, given the political situation in much of West Africa. There's been several coups in different countries. How concerned are you about the political stability in parts of West Africa?
I confess that I'm as concerned as one should be from a security point of view and from a protection of persons and protection of asset point of view. But geopolitics is geopolitics. There is one concern or another in one jurisdiction or another. As I said a few moments ago, the way that I think investors should be looking at this is about returns. And the geopolitical situation is a factor that is included into the return calculus, but it is not the only factor to be included into that. I mentioned a few moments ago permitting. So if we're in parts of the world where the geopolitics is a bit more challenging than, let's say, Canada or the United States or other developed parts of the world, but heck, today, even in developed parts of the world, the geopolitics is becoming challenging. But if it takes a multiple of the amount of time it takes to get permitted in that part of the world versus some of these countries that, from a headline point of view, have geopolitical challenges, then I have to take that into account. If I can be permitted and developing an asset within 4 years, but in a developed part of the world, it takes the better part of 8 to 12 years to do that, that goes to returns.
In a gold equities market like we have, some would say it makes more sense to stay private or be private. So why go public now?
I think ultimately precious metals mining companies should be public because the access to capital is there. Because if one wants to be critically look at possible M&A opportunities, you touched on that a few moments ago, then being public is clearly something that helps. One develops a currency. We would like to look at where are the M&A opportunities. We think that investors are interested in finding their champions. Hopefully we're one of those champions. We demonstrated in Yamana that we could deliver returns off of the investments that we made in our acquisitions. We'd like to do it all over again and demonstrate that we can deliver those returns. That requires public currency, requires a company to be public.
There does seem to be a number of single asset gold developers and producers in West Africa that have seen their share prices really hit by some of the the political goings on in parts of the continent. So there does seem to be a lot of opportunities there, as and when you can break out the checkbook.
There are opportunities, but I'd say that we're in this very unique time and why our timing could not be better. And again, very reminiscent to me of the startup of Yamana in 2003. We had the doldrums of precious metals. No one was interested in 2002 coming into 2003. Then we know how that movie turned out. We know what happened to gold price and to the gold equities. Gold price is strong and I believe it will get stronger. The gold price will go higher. I think that there is truth to that. And when I look at the gold equities, we're trading at a discount as if gold price is not trading above $1,900 per ounce. And I think that represents an impressive upside for investors willing to look at precious metals equities.
Allied Gold listed in Toronto. Why did you choose that market rather than rather than London or New York?
Well, Toronto is, perhaps some of it is what we know, what I personally know, and the success that we've had in other ventures that have listed on Toronto. But I would say that for a precious metals mining company, certainly one that even the size of ours at roughly $1.3 billion of market capitalization, even a company of that size and scale is still comparatively small. And a precious metals mining company of a certain size will attract more attention on the Toronto Stock Exchange than it would on other stock exchanges in the world. At some point, we have to consider a migration or at least a supplemental listing on some of these other exchanges. You are aware that Yamana was listed on New York after Toronto and then London as well. And hopefully we'll follow the same progression in the case of Allied.
We've touched on M&A a little bit, Peter, specifically related to Allied Gold, but I'd like to get a wider view from you, if I may. The market would seem to be in a good position for producers to be acquiring smaller companies whose share prices have been really, really hit and filling out their pipelines. Yet it doesn't seem to be a great deal of activity there. Your peers aren't really doing this. Why do you think that is?
That would require a much longer conversation. But my impression is that some of it is the technical work that's gone into the projects. Part of it is also investors and the skittishness of investors. There's still a certain skittishness on the part of the investing public on have we earned the right to engage in M&A transactions. So if we couple it all together, it's understandable that larger companies would be reticent to want to acquire smaller companies, particularly companies that are advanced exploration or development stage companies. Are we certain about the capital that's required? Are we certain about the permitting processes required? These are some of the things that I think will go into the evaluation on the part of the larger companies. But I think, frankly, there are opportunities, but the opportunities are not just on development stage companies. I think the opportunities are across the board. There are companies that are languishing, but they're producing companies with multiple assets. Yamana demonstrated earlier this year that we could make value for investors by busting it up so that two companies bought the relevant parts of each for each of them. Do I believe there are other opportunities like that out there? Absolutely. And those are some of the things that I think should be pursued.
You mentioned that the gold price is still relatively high and producers are making decent margins, yet the stock prices are not really reflecting that. When do you think gold stocks will get a break?
The when is always the difficult part for me, but will it occur? I think the answer is yes. Will it occur within a period that is short to intermediate term rather than longer term? So let's say realistically within a year to a few years. I think all the telltale signs of gold price doing well are there, and this time we're also coupling that with the fact that the equities are trading as if gold price is not $1,900 plus per ounce. So I think that we're in this perfect storm of precious metals prices going higher, but the equities following suit and frankly probably doing better than precious metals. Let's look at what's going on with worldwide debt. Someone has to explain to me on the deficit side, how is it that a country like the United States, as robust as its economy is, as successful as it has been for the last several years at avoiding the pitfalls of recessions, explain to me why the deficit is as high as it is. Worldwide debt is at a level that is a multiple of where it was before the pandemic in 2019, 2020. Interest rates are going higher. It just seems to me that we're in this perfect storm of socioeconomic tensions, then coupling with geopolitical tensions that will cause gold prices to go substantially higher. And I come back to my thesis, which is that if the gold equities are trading as if gold price is discounted at $1,900, when gold price goes substantially higher, $2,500, $2,700, I think that the gold equities will do a lot of catch up and to boot actually accelerate above that.
Interesting. Okay, Peter, next 18 months or so, 12, 18 months, hopes and fears? Lots
of hopes, very few fears. I would not be doing this. One of the things that has not been said that is important to say is that unlike a lot of precious metals mining companies, the former management of Yamana invested in this round of financing. So we've raised just over 260 million. 40 million of that came from us. As we were coming in, our view was we're not just hired guns. We're here as investors, aligning ourselves with public investors. We wouldn't have done that if we didn't think that there was opportunity. Clearly there's risk, but we wouldn't have done that if we didn't think the risks were manageable and the opportunities were far greater.
Well, I wish you the best of luck with Allied Gold. Peter Marrone, thank you very much for joining us today.
Thank you.
And this is Paul Harris for Kitco Mining at the Americas Gold Forum in Colorado Springs. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.